Hello guys, welcome to my channel once again. This is Francis from SmartFX. So a lot of people have been asking me, requesting that I should show them how to trade moon and dump on Kwakolmarkets. Remember I told you guys that moon and dump is traded on Kwakolmarkets. They are the new broker in town. This moon and dump are synthetic indices, just like the ones traded on Binance. So sorry, on Deriv. So before now we thought that it was only Deriv, and a lot of people even now thought that it was only Deriv that trade these indices until recently this broker come here, and so far so good. We have been making money from the market. As you can see, I have it running trade here. I've been growing this account for the past months, and you can see what we've got here. Well, but that's not what I want to show you. Now what I want to show you in this video is how you can actually trade this moon and dump. So the trade that is currently running is moon, as you can see, moon 200 index. So it is the moon that is running. You can see moon 200 index there. So when you see something like this, when you see something, you see a low here, you see a lower high, and then you see a higher high, sorry, you see a low here, you see higher high, another higher high, and then the previous move is above this high. You are seeing higher high, you are seeing higher high. It means that the market is in an uptrend. You can see where is something happening here. It's a 1 hour chart, and this market has been in an uptrend. You can see that even the 4 hour chart has confirmed our uptrend. But let's come back to the 1 hour to show us clearly what we're talking about. So you can see all this higher high, another higher high here, another higher high. Then you know that the market is an uptrend. So basically how this moon move is just like boom on Deriv. For those of you that have traded on Deriv before, you can see that boom will be moving, will be selling. So at a point you will see a very strong spike to the upside. That's exactly what is happening here. You can see that this downtrend selling here, and at this point there was a spike. So this spike happened so fast that it will take time to sell, but when the spike started, it will spike very well in the upside. So they are telling you that it's moon. Moon is actually in the sky, right? So it means that this will spike and go upside. This will spike and go upside. So basically, that is how the moon works. The main movement is the upside. So if you are selling the market, it means that you are selling against the movement of that moon, because its movement is always spiking. But I can tell you that these things respect price action so much. They respect price action. So if you know your price action so much, you don't have problem trading them. So let's go to dump. I'll show you how dump also work. So dump is just like crash. Dump is like crash on Deriv. So the moment it will be moving up, so at a point there will be a sudden drop in price. The price will do what? Crash. You can say that the price is dumped. So that is how the name comes from, dump. The price will crash at a point. So that is how the movement work, and then that is how it's being traded. So in this market you can see the lower lows and lower lows and lower lows. So you understand that this market is in a downtrend. So what we'll be looking at is, what you're going to be looking at in this market is selling opportunities. Selling opportunities. So that is how this market works. That is how this market works. So I think I'm able to explain, to show you the movement of these candles. You can see these small candles, they are selling. So all of a sudden there was a spike. You can see the spike here. Only one candle covers the whole of how many candles. So now that's how it works. That's how it works. And that's the movement of the market. So in this video I want to show you exactly how you can trade this using the price action strategy and then indicator strategy. So for price action, before you will sell or buy this market, make sure that the market, as let's say for instance this market is in an uptrend. You can see higher highs and higher lows. So the reason why I took this trade here was because the market was in an uptrend first, and then the reason why I took this trade here at this point was because the market was in an uptrend, and then I see a retracement, so I entered my trade. So but currently the direction of the market is gradually changing, so I will soon be out of this market because the market might set down to this point before making another move. So that's why I took this trade here. And yeah, when you know the direction of the market, when you confirm the direction of the market in the higher time frame, it will be easier to trade. Some people say that this market doesn't respect stop loss, but it respect is good when you are trading it on the higher time frame. You are making analysis on the higher time frame to know the direction of the market. Don't use 1 minute time frame to trade the market, or 5 minutes. You can use that to trade the market, but make sure that you have done your analysis on the higher time frame to know the direction of the market. Always make sure to know the direction of the market. So in this video, let me go quickly to the indicator to show you how you can combine the indicator strategy with this price action strategy. So on the indicator window, look at the indicator window here. You click on this F. For those of you that don't know, you click on it. So on the main chart, you click on this plus icon here. You click on that plus icon. So what you want to put here is a moving average. So the first moving average will be period 100 shift 0 applied to close exponential. Just take a look at the settings here. Change this one to blue. Just copy the settings here to so you can apply it, and then you click on done. So you still on the main chart, you click on the plus icon again. I mean the one here on the main chart, and then we're going to add another moving average. So by this time we're using 10. Period is 10 shift 0 exponential. Then let's change this to green. Actually, let's change this to green. Done. Repeat the process. We're going to add another moving average. This time the period will be 5. The other settings, let's change this one to this dark green. Yeah, done. So now we're done. So on the indicator window 1, this is what we have here. RSI. Just copy the settings here to move quickly. I don't want this video to be too long. So you can see the period is 16. Apply to close. Style 2 pixels. Red. And then levels 90. 0. If you want to add the level, you can click on this edit. So here you can add all. If you want to delete the level, you can use this delete icon to delete the level. So you can use this plus icon to add those levels. Then having done that, you click on this plus icon, then add Ichimoku. These are the settings. Just copy the settings. So on this one, if your chart background is white, you use black here. But if your chart background is black, you use white here. We want these 4 pixels to show on our chart. But these other ones, if your chart background is white, make sure you use white, because all these other ones we don't want them to show. So we use the background of the chart. So having done that, let's go back to our chart. You can see what is happening here. So if you want to catch spike, this is how our indicator window looks like. If you want to catch spike, you come down to 1 minute time frame. So as I said, the market has been selling. So this 90 to 95 level is your 5 to 10 oversold, 90 to 95 overbought level. So this is a movement. So you can know that the movement is usually in the upside. So when you see this black moving average, this RSI touching this level 10, you place a buy. That means that we're expecting a spike in the upside, because this movement it will spike in the upside. It always spike in the upside. You can see that when each time the market hits the level 10 or level 5 on the indicator window, it spikes to the upside. Look at this candle here. Look at the spike that happened here when the market reached down here. You can see this in. They are very good. And they show perfectly. So for you to scalp, I'll show you how to scalp right now. For you to scalp this market, you wait for your 2 indicator moving average on the main chart. When they cross, anytime they cross, you enter for a sell. Remember, this market will sell, and then at a point we spike in the upside. So when the two moving average crosses, like they cross here, remember this is a 1 minute time frame. As they cross here, you enter for a sell, take 5 candles and move out of the market. Don't forget, guys, take just 5 candles. When the green and the light green moving average crosses, like here, you enter for a sell and take 5 candles and move out of the market. Guys, move out of the market when you take 5 candles. So let's go to dump now. So here is dump 200. So as for dump, anytime the market enters this moving average, this is the black RSI, touches level 90, you can see a spike in the downside occur. Look at this spike, guys. Look at the spike, multiple spike. So if you want to catch spike on this strategy, each time your RSI and your Chimoku enter level 90, look at the level 90 here, you place a sell. So at this point, there's always a spike in the downside. So each time they touch that level, you place your sell. Look at how it happens. Each time the market touch here, there's always a spike in the downside. So you place a sell right here. Each time this black RSI touches the level 90, you place your sell. Look at what's happening here. Look at it, guys. You place your sell. Right there. So if you want to scalp on this strategy, you can see that each time the two moving average crosses, as they crosses here, you buy, you take like 5 to 10 candles and move out of the market. Don't be greedy, guys. Don't be greedy. Each time the two moving average crosses, you enter for a buy. Each time they cross, you enter for a buy, and then take to 5 to 10 candles and then leave the market. You can see how this thing is working. Each time this moving average crosses, you enter for a buy. This is for dump 200, guys. Don't forget, this is dump 200. When it crosses, you enter for a buy. As for moon, when it crosses, you enter for a sell. So just take note of their differences here. When it crosses, you enter for a sell. But for this moon, just take only 5 candles and leave the market. Don't be greedy, guys. The market has a very special place for greedy people. So that is how this moon and dump have been traded. If you are new to this channel, please, I would like you to subscribe, because I'll be posting all these strategy videos on how you can actually trade this market. They are very nice. I've been making money with them. You can look at my running trade here. It's a live trade, and I can show you that I've been making money with this market. You can see the market is changing direction now. I will soon close my trades, but I've made my profits already. So that is how we trade this market. Subscribe to this channel, turn on the notification bell, and anytime I drop a video, you'll be notified by YouTube.